Welcome to your market outlook for the week of October 6th through 10th. With the Fed's first cut behind us, this week is all about confirmation. Does the data support a gentler path ahead, or do inflation and labor strength challenge it? On Tuesday, we'll see the consumer credit report. This number reveals whether households are still leaning on credit cards and loans to sustain spending. Slowing credit growth would flash a red flag for consumer strength, while a pickup would signal resilience but may keep inflation sticky. On Wednesday, the Fed's FOMC minutes arrive. This is the key to understanding just how divided policymakers were over the September cut. If the minutes emphasize labor softness and downside risks, markets will lean dovish, favoring tech, housing, and rate-sensitive assets. If they stress inflation and caution, expect yields to push higher and value names to lead. On Thursday, weekly jobless claims will provide a timely read on the labor market. A rise in claims would reinforce the Fed's easing path, while another drop suggests the economy isn't slowing as much as feared. This report could swing short-term yields and drive sharp intraday rotations. Beyond the calendar, two developing stories are worth watching. First, the ongoing threat of a government shutdown continues to cloud economic releases and could delay key inflation data. Second, investors are already looking ahead to the IMF and World Bank meetings the following week, where global growth outlooks will be updated, potentially shaping risk sentiment into Q4. As for broader trends, consumer cracks are showing up as a red flag, with household debt rising faster than wages. On the green side, corporate balance sheets remain strong, and business investment has held steadier than expected. This mix keeps markets caught between optimism and caution. Actionable playbook: into Wednesday, hedge exposure with options and stay nimble. If the Fed minutes lean dovish, growth and real estate should rally. If the tone is hawkish, rotate toward value, financials, and energy. Use jobless claims as your tiebreaker, and prepare for bigger catalysts next week with inflation data and bank earnings. This is not financial advice.